one of its first rallies of the last couple of weeks of trading. Sterling finally putting on a little bit of ground on euros. You show me all this activity, but I still don't necessarily know what to do.
Right.
And today I want to go through some of this activity, summarize it a little bit, talk about the small dollar index, which I think simplifies a lot of the crap that I just talked about, and then give some practical takeaways of how you might build, at least to start here, a long-term opinion on the US dollar and other currencies to create a currency portfolio, at least to start. Because, I mean, when we talk about stock markets, Pete, or trading futures in equity indices or trading futures in interest rates or energy indices like crude oil and natural gas, you don't just kind of jump from A to Z. You know, a lot of people will sit there and they'll say, okay, I like Apple stock. I like this young stock, Shopify. I like this other stuff. And then after that, you get a little comfortable and it's like, okay, well, I can buy and sell things on a shorter term basis. Oh, there's futures on these stock markets. There's options on these individual stocks and the stock market futures. And that's how you kind of grow here. So say I want to take some baby steps on at least creating an idea around currencies on the whole. And here it's been kind of an interesting year for the dollar. As you can see, it started, it's a continuation of its upward trend. This is just 2020, but if we showed you the charts for 2016, 2017, and 2018 prior to this year, a lot of buying in the dollar. And then last year, I think a little bit of a dip, but a little continuation of that buying in 2020 here. And then a good deal of back and forth, bringing the index all the way back to unchanged. And Pete, this is an index that you've been mostly trading from the short side. And that's your opinion. You want to speak to that a little bit?
Yeah, you know what? I think this is going to be an interesting year where the dollar, and I feel because of, as you mentioned, depending on what you pick today, whether it's Canada or Aussie, you saw a very different result. The dollar in general, which has been very, very strong, is going to see a very strong with very low volatility. Now, currency volatility is never what you see in gold or silver or crude, but as a comparative metric, it is a third of what it traditionally is. So I think the last half of this year will be a very interesting dollar trade where we will start to get outside of this comfortable area in terms of range, in terms of the amount we move every day, in terms of volatility. And I think this will play into, you look at the range here and you have a lot to choose from basis March's highs and lows. But I think we're going to see a trade between 145 and maybe 155, 160. I think there's going to be a lot more to do back and forth on that. And again, that's just my opinion, but I think currencies are due now to run their course of uncertainty. Oftentimes when we have violent events in equities like this, or maybe in interest rates, currencies have kind of a little reflexive move, but then they just sit there. It's almost like there's uncertainty. The market doesn't quite know what to do with currencies, but I think they're due for that kind of movement we've seen everywhere else. I don't want to not have this piece on.
Sorry. Absolutely. And
am I supposed to wake you up at that point? Or?
No, I muted myself because one of 36 motorcycles that drive by my apartment on a daily basis just scooted by. It was very kind of him to do that in the middle of the show. Him or her. I don't want to, sorry. One of them was some jerk. No gender.
Oh, you really hate these motorcycle dudes.
Oh my gosh. I'm done with it, dude. But yeah, I would agree with you there. Pete's forming this short opinion on the dollar, mostly on what's called price action. And what we've seen in price action of the last few years is as stocks build in a lot of appreciation and value, so did this US dollar.
Right.
And what we've seen now, as stocks have, for the first time in a couple of years, showed that two-sidedness, showed that they can be volatile to the downside a few different times here in 2020. Pete's thinking that this market is almost due to replicate a little of that seen in stocks. And I would agree. And you know, Pete, speaking a little bit to what formulates an opinion on currencies from kind of the macroeconomic or just conceptual side, not practical price action side, a lot of the ground that the dollar built on the euro on sterling, on Japanese yen, came on the back of U.S. interest rates
Right.
being much higher than German debt,
Right.
much higher than Japanese debt. That gap being as high as it's been historically in the last few years. What's interesting, and I think what Pete, I think both of his idea and this idea are teaming towards this short bias he has in the dollar, is the fact that that's been, in a lot of ways, squashed here as U.S. short-term debt has come down to zero. We've got a 10-year that is now, has been under 100 basis points for a while now, whereas it was, a couple hundred basis points on top of
Right.
some of those other countries and their central banks' debt. And so that's how you kind of build this bias. Now, Pete, of
Right.
course, he's rarely right. So you don't have to necessarily agree with him. I'm kidding, of course. Pete's right very often, much more often than I am. But you don't have to necessarily agree with him. But those are kind of the two main things, right? Is price action. Okay, how has this thing moved this year? How has it
Right.
moved the last couple of years? And then, okay, what's the idea that's driving this? And in a lot of ways, currencies not really driven one for one by stocks, but as Pete says, that stock volatility usually correlates to currency volatility in some way or the other. I mean, you saw it here in March, but mainly it's driven by those relative interest rates, the state of those economies relative to each other. And it's nice that this U.S. dollar product is a very simple personification of, okay, US currencies versus everyone else, as
Right.
opposed to, when you get so downstream, it's like, and here we'll actually get to it here.
And you
It's
can't.
like
Right.
it's how is US versus
Right.
Japan? How is US versus Eurozone? How is US versus Australia? The US versus them with /SFX a lot simpler, but this is a lot of movement bar none, right?
Absolutely, it is, and it speaks to, and this is why I think we're in some form wrapping around that zero band again, and I think we always talk about context, like that difference in rates. Yeah, there used to be 200 basis points of difference between U.S. rates and German rates. That's shrunk dramatically. Now, that doesn't mean that instantly currencies realign.
Sure.
But you know what? The story is changing. The uncertainty is growing. And that is what will drive a testing of the ranges and kind of unlock a little bit of movement within them. So I'm not hanging my fact on comparing every day to say, oh, well, the German US 10-year yield
Yeah.
has shrunk another 2 basis points. So I'm definitely adding more longs. But the idea that that sets up for a change in environment and thus hopefully a change in movement here, an opportunity, is really what we're looking for.
That is a beautiful kind of concept, though, that you have there, which is there's one trade every day. Everyone shows up to the market,
Right.
and okay, U.S. Treasuries have a higher yield than German debt today. Okay, buy U.S. dollars, sell euro, and we're done. Everybody go home. But it's not the case because a lot of it has to do with, okay, what is changing today? What are we projecting German debt to be in the future? Because it's funny, we see this, the central banks all meet relatively around the same time. The major ones in the US, Bank of England, ECB in the Eurozone, and Bank of Japan all meet relatively around the same week. And it's funny because sometimes you'll see the US, oh, they just cut interest rates and the US dollar gets hit, but then they'll go, oh, but the Eurozone, they're expected to cut interest rates as well. And you'll see that fluctuation, which creates for great back and forth to just get on the other side of, as you can see here, all these currencies against the dollar. Yen seeing a big upward move. You get on the other side of that, and it's come back to unchanged. This move here in Australia, Australian dollar, huge to the downside, has fought all the way back. But some of these currencies, Pete, are still off on the year. And if we go out to a longer time frame, because we are just trying to get that initial bias in here, and I want to look at, okay, hopefully you have a good handle on where you think the US dollar is going a little bit here. But also, it doesn't have to be this full us versus them. This has almost been kind of pairs trading week here at small stakes. So I want to look at adding a little bit of flavor to it as well. And you see here that Canada and sterling have been the vast underperformers for the last decade, as yen has actually, which is kind of crazy to me because I think of Bank of Japan and all the struggles that they've had recently to try to promote economic growth, and they were kind of one of the first groups to go down to zero and even through zero. And there was a lot of action out of the Bank of Japan in 2015 areas. You can see actually you can see in this green area here. That's when Bank of Japan was actually the cheapest of these currencies
Right.
relative to movement from 2010. But that's an ode to the back and forth of these. So yes, I can get with Pete, I could get my short dollar bias, but I could also add, okay, well, the outperformer in this data set in both of these actually close is
Right.
is that yen piece. So I could look at, okay, short dollar and then maybe a little bit of short yen exposure too, because it's the outperformer. If I'm short the dollar and long all these other currencies, I'd much rather have the outperformer yen not part of my longs, because I think that that could, as we've seen time and time again, change hands with the other currencies. And same from the long side. And thankfully, these micros are pretty much at a 1-for-1 basis with /SFX. If you want to be long the US dollar and you look at this chart here and you say, wow, Canadian dollar has really gotten its butt kicked. I don't want to be long the US dollar and short Canada dollar with that whole
Right.
other basket of 7 currencies. I could look at something that is long US dollar and long that weakest one in Canadian dollar. And remember that this is a buy or sell scenario with this pairs trade, but kind of easy to take one currency out of that big basket. You can get that big idea that US versus everyone else, but you can also make it a little bit cute relative to your own opinions past that US dollar piece.
Yeah, and you again, it's not an either or situation here. And I think we talked about this in a really interesting fashion, the context around silver yesterday. And if you guys didn't happen to get a chance, check out Small Stakes for yesterday, because I thought that was such a great takeaway around context of different products affording you different opportunities and how you can start to build strategy. Same thing here, the ease at which you are, we talk about picking the extremes. I mean, you can look at the visual previously and it lays out exactly what the extremes are. But how can you best assume an opinion and then not trap yourself into, well, I don't like this. This piece of it doesn't make any sense against my idea. Fine, let's sterilize it out. Let's take it out of the equation and give yourself the exposure you want without it. And that's where combining this, this speaks to generally the dollar in 2012 was, currencies, the dollar was weaker, currencies were stronger, and we've seen a dollar rally, AKA a currency fall. I know that's confusing. It's just the way FX is traded versus a simple dollar index, where if you think the dollar's going higher, you buy it, dollar's going lower, you sell it. It's this inverse relationship here. So let's make it easy. Let's sterilize out what we want to, and then let's find opportunity within it. So
It's
this really speaks to that.
Yeah, it's really a matter of picking that dollar bias. That's the first hump to get over in creating that currency portfolio. But the dollar product, while it's nice and small and easy to kind of understand and access here from the small exchange, it is against 7 currencies. These 5 here: euro, yen, Australian dollar, British pound, Canadian dollar, Chinese renminbi, and Mexican peso. It doesn't necessarily have to be one versus all 7 of those. It's a good place to start. But you could say to yourself, okay, I want to be long or short this purple line here in the US dollar. And I want some kind of action on these weaker ones or some kind of action on these stronger ones. And that's kind of how you round out that portfolio. But Pete, that is enough time here. Hopefully
Yep.
people are feeling better about creating that currency portfolio with small exchange products and other products as well.
Good
But
piece, Franklin.
if they want to learn more about small exchange dollars and other products, come over to the Small Exchange website here. Got videos and everything else that you might need to get on board with a currency portfolio or metals portfolio or stock portfolio. And then also the Small Exchange subscription can allow you to build that portfolio with small exchange products. And Pete, I have to imagine we're going to have more currency products coming down the line, maybe a small dollar versus just that Chinese renminbi, which is an interesting one people don't have access to very easily with stocks and ETFs or even futures at this point. And all those currency products in the future and currency products now from the small exchange, 50% discounted exchange fees, for life. Take it with you anywhere. But Pete, I have to take you with me off the show because Truth or Skepticism with Tom and Dylan coming up next. That's going to be great. They've got much funnier and better opinions than we do. Stick around for that, and we'll see you all here tomorrow for Small Stakes. Have a great night, everybody.
Good night.